Distributing an estate. When someone dies, their beneficiaries are often keen to start the process of distributing the estate as soon as possible. However, there are some important time limits you need to know about before you can safely start. For example, if there's a family dispute and you think someone might claim a larger share of the estate, you need to wait 10 months from the date probate is received before distributing anything. Similarly, if you've placed a statutory notice for protection against unknown debts, you need to wait 2 months from the date of the notice. See our statutory notices video for more information. You also need to make sure that any investigation by the DWP into overpaid benefits has been resolved. All income tax, inheritance tax and capital gains tax has been paid. All debts that you know about have been investigated and agreed, and the estate is solvent. Important points. Even if an estate is solvent, there still might not be enough money to cover all of the gifts mentioned in the will and pay the deceased debts. In this situation, there's a clear order in which assets must be used to pay debts, unless the will says otherwise. Specific gifts, such as my house or my shares, are effectively ring-fenced, as are cash gifts. The assets left over make up what's called the residuary estate. Debts are paid from these funds first. If there isn't enough money in the residuary estate to cover the deceased debts, you'll need to use funds set aside for cash gifts. If there still isn't enough money, then specific gifts may need to be sold. When you're ready to pay the beneficiaries, you need to make sure they can give you a receipt for their inheritance. If a beneficiary is under 18, doesn't have the mental capacity, or is bankrupt, you may have to make the payment to someone else. Visit our Knowledge Centre for more information on distributing an estate. Although all this might sound complex, DIY Probate contains useful features designed to help you keep track of all of the deceased assets and liabilities, as well as keeping a record of what's been paid and what needs to be settled. Top tip: PRs need to make sure they distribute the deceased assets according to their will or the intestacy rules. However, it's important to remember that beneficiaries can agree to change the distribution.